You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter, and from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. It is the 10th day of December, 2015. Let's take a quick look at the numbers. Don't know how quick it'll be, but we'll take a look at them. I see red. Red. There's some green. Okay. This set of charts has puzzled me 2 days running. Perhaps I should end the puzzle. I think I will. Stand by for the end of puzzle. Yeah. Well, we can do better than that. Hang on. That'll take care of that one. I think. There we go. My goodness. All right. These are cash markets. Start with U.S. S&P 500 is up 7 points. Dow Jones Industrials are up 77 points. NASDAQ is up 20, and the Russell 2000 is up 2. So, all good, all green. Crude oil down 39 cents, trading at 36.77. It's down 1%. Gold is off by $4.20, down at 10.72. The Asian markets, we had all green in the U.S., but Asia, a little different story. The Nikkei down 254, Shanghai down 16, the Hang Seng down 99 points. The big mover there would be the Nikkei, which is down 1 1/3%, off 254 points. Last but not least, in Europe, the DAX is up 6.5 points. The FTSE is down 38 points. CAC 40 is down a little over 2 points. And that's it. Europe's mixed, US is green, and Asia is red. And our two commodities, our bellwethers, crude oil and gold, both in the red today. So, how are you doing? What's going on in your world? Happy Thursday. We got past up day. Now we're on that downhill slide into the weekend. Everybody's working for the weekend. Let's see what headlines. Let's see what they're telling us is important today. Let's see what they're telling us we should be obsessing over. By the way, if you can't see the chart I have up, it's the S&P 500 Emini Futures. In order to see the chart, if you're not driving or operating any heavy machinery, go to our homepage at CFRN.net. On the right-hand side of the page, just click the big microphone, follow the instructions. Within about 30 seconds, you'll be registered, and you only have to register once, and you're good all the way through the end of the month. Okay? Come January 1, you'll exchange 30 seconds for 30 days. You'll be good to go for another month. Now, keep in mind, we do not send out those reminder emails. We pay Citrix to send those out for us. And so if you aren't getting your reminder email in a timely manner, a little secret, first day of the month or the first day that you register, just grab that link, hang on to it, wherever you hang on to stuff of a digital nature, and just click that link. It's the same link to the radio show every day of the month. So this way you don't get frustrated. I know how frustrating it can be when you're trying to go somewhere and do something and it just won't work. Well, let us see what Goldman Sachs sees. With 2015 nearing an end, the focus is turning to 2016. We've got a presidential election coming up. Everybody's extremely excited about that. Now, research reports are flooding in, offering views on what to expect in the year ahead. The latest note to hit the inbox comes from Goldman Sachs, titled GOAL. It stands for Global Opportunity Asset Locator. It's an extensive document full of statistics, forecasts, and figures evaluating the macroeconomic backdrop, key themes, likely asset price performance, and risks for the year 2016. It's be a little bit harder to predict a year when there is a presidential election, one would think. Now, Goldman expects that global economic growth will accelerate in the year ahead, rising 3.5% on the back of stabilization of hard-hit EM economies and a small acceleration in Europe and Japan. Okay. By the way, U.S. government is cracking down on the Yakuza, which is the Japanese mafia. They seized a bunch of bank accounts today. For the U.S., still the world's largest economy, growth is predicted to slow to 2.3% from 2.5%. China closing in on the top spot. Despite roiling markets for much of 2015, the bank expects growth will slow to 6.4%, down from the 6.9% level likely to be achieved this year. Perhaps explaining why U.S. growth is tipped to slow, Goldman notes that strong labor market data increased our confidence in a Fed liftoff on December 16th. Looks for the Fed to hike interest rates by 75 to 100 basis points in 2016 before delivering a further 100 basis points of tightening in 2017. All right, now that's big news. Goldman expects the Fed to raise interest rates by 75 to 100 basis points in 2016 before delivering a further 100 basis points of tightening in 2017. Okay. The market discounts a less steep Fed funds rate path. Analysts at the bank note, we believe the Bank of England will follow closely and raise rates in Q2 of 2016, pointing to significant monetary policy divergence. They tipped the European Central Bank and the Bank of Japan to loosen monetary policy further in the new year. They also predict that the People's Bank in China will deliver 2 additional interest rate cuts, along with an additional 300 basis point reduction to the bank's reserve ratio requirement. The renminbi is also tipped to weakness, weakening to 6.6 to the US dollar, higher than the current level of 6.43. So, nothing that dramatic. A slightly better than average year. Now, something caught my eye yesterday, and I want to share that with you real quick before we go to Michael. How did the headline go? Sweden's, let's see, war on, yep, that's it. I believe that is it. Sweden has declared war on cash. Now, this is coming to America. It's already in America to a degree. In fact, Burwell, I believe it was Burwell, commented, months ago. He had, if it wasn't Burwell, it was somebody that's a regular. They had an issue with Chase Bank that reflects this, but let me just share this. Among the endangered species in Sweden are the gray wolf, the European otter, and cash. Back in June, the author of this article wrote a story about how in 1661, the Scandinavian monarchy became the first country in the world to issue paper money. Did you know that? I did not know that. It was an unmitigated disaster, by the way. And so now, after being the first country to issue paper money, they may be the first to ban it altogether. All across Sweden, cash, the physical kind, not cash in the bank, which, between me and you, really isn't any cash at all now, is it? It's disappearing. Many, if not most, businesses have stopped accepting it. Now, you're like, that's far-fetched. Come on. Not in America. Well, let me continue. ATMs are now as uncommon as payphones. Churchgoers tithe using mobile apps. Fewer and fewer banks accept or even dole out cash. Imagine, and I believe that was the issue that someone here on the show, and I keep thinking it was Burwell, maybe it was someone else. They had gone into a Chase Bank. They had come into some money somehow, cashed in a CD, whatever it was, and they had just a lump sum of cash, and they wanted to deposit in their account. And I think the bank refused based on the fact that they couldn't prove where the money came from. Somebody will stick their head up here in a little bit and go, yeah, that was me. And we'll get that story again firsthand. So it's happening to a degree here in America already. Now, ATMs are now as uncommon as payphones. Oh, I see. Because we don't ever see payphones anymore. ATMs are going away as well, because they're only good for one thing, dispensing cash. Well, you could deposit a check in theory. So what's really going on? For one, the Swedish people have enthusiastically embraced mobile payment systems. Even homeless newspaper vendors carry card scanners. Yeah, but that's not the concerning part. Cash's demise appears to be orchestrated by Sweden's central bank, which of course stands to benefit from the switch. In a purely electronic system, every financial transaction is not only charged a fee, but can also be tracked and monitored. Plus, taxes can't be levied on cash that's squirreled away in Johan's sock drawer. Since July, interest rates in Sweden have lingered in negative territory at negative 0.35%, forcing account holders to spend their money or else see their balances slowly melt away. Negative rates can also be found in Denmark and Switzerland, where they're as low as negative 1.25%. The Swiss 10-year bond yield plummeted to negative 0.40% on Tuesday, which means people are paying the government to hold their investment. As David mentioned the other day on the show, that happened not too long ago here in the U.S. for a brief period of time. Nick Giambruno, senior editor of Casey Research. Casey Research's International Man, calls negative interest rates in a cashless society a scam. His perspective is worth considering. If you can't withdraw your money as cash, you have two choices. You can deal with negative interest rates, or you can spend your money. Ultimately, that's what our Keynesian central planners want. They are using negative interest rates and the war on cash to force you to spend money and stimulate the economy. The war on cash and negative interest rates are huge threats to your financial security. Central planners are playing with fire and inviting a currency catastrophe. Sovereign Man goes even further, writing, financial privacy has been destroyed. Banks are now merely unpaid spies of bankrupt governments, and they will freeze you out of your life savings in a heartbeat if some faceless bureaucrat orders them to do so. Over the years, we've seen corrupt, unbalanced fiscal and monetary policies wreak havoc in socialist countries all around the globe, where governments often feel entitled to restrict and even confiscate their citizens' assets. In 2008, Argentina nationalized approximately $30 billion in private pension funds. A little over 2 years ago, the Cyprus government ransacked citizens' bank accounts to fix its own mistakes in mismanagement. Last year, Venezuela put $700 credit card spending limits on vacationers visiting Florida. Limitations on how much someone can spend and save can now be found in many countries, from Italy to Russia to Uruguay. In example after example, people's rights to save and freely hold cash have been disrupted with tragic results, and today we're seeing these disruptions in first world countries such as Sweden, Switzerland, and Denmark. I have faith that the dynamic American political system will not allow these things to happen, but we need to be aware of events in other countries and be vigilant in protecting our assets. At the same time, many poor policies here at home have disrupted how we save and spend. For example, it's easier to open a credit card account than a savings or investment account, which obviously doesn't encourage either of those things. And a recent flood of new regulations passed down from the federal government continues to suffocate small business. Since 1960, the Code of Federal Regulations has grown from 22,877 pages to 175,268 pages as of 2014. So think about it. Your cash. If you have cash, will you be able to keep your cash? Will you be forced to turn in your cash when you turn in your gun? All I can say, friends, is we're going to the polls in less than a year. You need to start deciding what kind of America you want your children and your grandchildren and your great-grandchildren to inherit. You and I are making the decisions today that will create the America they grew up in. So give it some thought. All right, let's go to Michael for a recap of everything that happened today in the live trading room. The good, the bad, the stuff that we don't sweep under the carpet. After that, I'll be back with our good word for the day, our Concierge Trade Alerts from last night, and of course, we'll talk to David from Page Trader, get his forecast from the edge and his take on the world, all that and more. Plus, today is every other Thursday Ed Corey's Day, so Ed will be joining us at 1:45 Eastern. All that and answers to your questions. Take it away, Mike.
All right, I will grab everything, bring it on over, and all right.
Okay, you got it. There we go. Okay.
All right, let me bring
It's all yours.
spreadsheet over. All right, I will hit record and we'll go through these. All right. There. Good afternoon, everyone. Today is Thursday, the 10th day of December, 2015. All right, today in the live trading room, we lost 2 ticks on the Russell. We made 3 ticks on crude, 2 ticks on gold, and 24 ticks on the NQ. Today it took us 7 minutes and 1 trade, again, same as yesterday, to get to $100 a contract, but today we took 28 trades in total. On the month, we are now up a gross profit of $2,780 a contract. That's over 8 trading days, averaging $347 a day. Now, if you were to apply an $8 commission, and nobody should have an $8 commission, but if you were to apply it, I'm just giving you a big range here. An $8 commission, your net profit would be $1,428. Okay, $1,428. If you were to apply a $5 commission, your net profit would be $1,935 per contract. Okay, that's $1,935 per contract. Now, that would be the net profit. Sorry, that's over 8 trading days. Okay. Now on the year, we have traded 231 days. Our yearly total gross profit $61,612.50. That's averaging $266 per day. $266 per day. Okay. Now let's go back here. Yeah, go back, and I will show you how to take the free trial. All right, if you have not taken the free trial, then hang on a sec. If you have not taken the free trial, then you simply need to go here to the home page at CFRN.net in the right-hand column where it says register for a free trial. Put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link, okay? You must click on the confirmation link. I'm just reading down. You must click on the confirmation link. Okay, if you don't click on the confirmation link, you will not be sent a free trial. Okay, I was just reading through all the things. I'll go check it out in a minute, John. Yeah, you got to click on the confirmation link, okay, because that's how we know that you took the trial. And the gross total, come on. The gross total is 2,780. Yep, 2,780 gross. Okay, we're up 150 bucks today. Okay. You're welcome. All right, now let's get into the actual trades. Okay. We had a lot of trades today. And out of the, what did I say, 28 trades, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Only 15 out of the 28 trades had an effect on price, or my P&L. That means we had 13 break-even trades. Almost half of our trades today were break-even, so there wasn't a lot of follow-through. The first trade on gold that we took was right here. We took 1 tick profit on that one. Okay, and we didn't have any more setups for quite a while. We had one right here. We took a break even on that. And then finally right here, we had 1 tick profit on that one. Okay. Yeah, nothing else. You know, it's possible you could have gotten long right here for this move up, but that was at the end of the live trading room. For this move up, I might have gotten another couple of ticks out of that if I'd have done it. There were no other trades in here that you could have done, really. Oh, wait a minute. You could have gone short right here, I guess. Could you have? We weren't trending. We didn't have a lower swing. Well, we had lower lows. Yeah, we had lower lows and lower highs. You could have gone short right here. That would have stopped you out. And that is the truth about trading. That was during the break. Okay, I did not take that. Let's see, the Russell. Now I'm going to scroll all the way back here. And we're going to have to wait for data here for a minute. Waiting for data. There we go. And our first trade on the Russell was right here. This was our first trade of the day. It was on the Russell. We took long trade right here and 10 ticks profit. That was our goal for the day right there. And our next trade, we gave 8 ticks back. It looks like the next trade that I took right in here was a break even. Okay, I missed a short trade there and there. And good, that's better. And I had another break even trade in there. I didn't go long in here because the black step line had crossed down. But I did gain something right here. It looks like I didn't take that into account, or maybe I did. And there's a, you know what? I did. There's a trade that I skipped that was that looked minimized in here, somewhere in here where I stopped out for minus 8 ticks. That put us at minus 6, and then this one was 4 ticks profit, put us at minus 2. Okay, we missed that one, that one, that one, and we got a break even there. And that was it. That's where we ended the day, at minus 2. When it scrunched up a lot back here, there was a trade that I had highlighted back here. You see how it's all scrunched up? And this one right here, I think I stopped out on. Nope, this is the one I stopped out on. That one over there was a break even. This is the one I stopped out on. Okay, I knew there was one stop out in there. That's what got us down. Actually, there were two stop outs. There was that one and another one. Because we were at plus 10, then we got down to 2, then we went down to minus 6, and then we got back to minus 2. Anyway, that is what we did. Now, during the break, it was really choppy in here. During the break, I don't see anything yet that I would have taken. Here we go. There's a long trade right here that I might have taken, and a short trade right here, and that would have been it during the break. Okay, on the Russell, we ended up with minus 2 today. On crude, yeah, I'm gonna change. Thanks for the reminder, John. Tomorrow we're gonna roll into the new contracts on all the December contracts that we have. We're gonna roll into the new contract. Okay, we'll be rolling into the H contract. Okay. Yeah. Today, you know, the volume is split today. That's probably why there wasn't much follow through on most of these things, because the new contract became available today. I've been telling you guys this for a couple of weeks. Not every day, but I did tell you a couple of weeks ago because somebody had asked. The new contract became available today for all the Z contracts, all the December contracts. The March contract is now available. Okay. We'll be rolling to that tomorrow. Reminder for you too, Dwayne, when you're doing the alerts tonight. All right, so on the crude oil, we had a break even there, missed a long trade there. The cycle was going down too steep there. A break even there, a break even there. So our first 3 trades were break even. In our last trade we got 3 ticks profit on, but I don't see where I did that. See, because this is all during the break in here. Anyway, we ended up with 3 ticks profit on the crude. I don't know where that trade is. This was during the break. It was a short there. Nothing I would have done there. Yeah. Anyway, 3 ticks profit somewhere. we had another short trade in here somewhere. Could have been right up in here. Right up in here. I'd have to go look at my account. There is a long trade from right here though, right where we are, 36.80. If you want to take that long, what you would anticipate is the green line getting up into the cycle and it putting in a higher swing. So we're getting up above 36.87, probably up to 36.92. Okay. On crude, we were plus 3. The NQ, note on the NQ, we're on an 8-tick range. That's because on a 4-tick range, it was just really hard to deal with. Now we started off with a 4-tick range and it was bouncing all over the place. So let's let the data load right here. We took a bunch of trades here on the NQ. Now we started out on the NQ with plus 4 right here. All right, and then we had a break-even trade there, and over here we had plus 12, putting us up at plus 16. A stop out right there, putting us back down to plus 8. Then 8 ticks profit there, putting us up to 16 again. A break even, and 8 ticks profit there, putting us to 24. One more break even right there, and that was all we did with the NQ. Not really anything happening in here with the NQ during the break. Okay. Now the ES. We had quite a few trades on the ES today. Let that data load, and then we'll get into it here in just a minute. Here we go. All right. Okay, on the ES, here, let me just remove that. There we go. On the ES, our first trade was a break even. Our second trade, we made 4 ticks profit. Third trade was break even. Fourth trade, we made 1 tick profit, putting us at +5. Fifth trade, we made 3 ticks profit, putting us at +8. And then the sixth trade, we stopped out, putting us back down to break even. That was our day on the ES. At the end of the live trading room, there was a shot of going long right here. It had about 5 ticks in it, and that was it. And it turned around and got really choppy and did not produce another trade because it was inside the weekly trading zone right there. Okay. All right. So that was it. Now, oops, that's not the thing I want to pick up. This is. All right. On the Russell, we were -2. On crude, we were +3. On gold, we were +2. The NQ, we were +24. Okay. On the month, we are now up $2,780. That's over 8 trading days. Okay, John. Thank you. That's over 8 trading days, averaging $347.50 a contract. My picture is like 30 years old. I was in that picture. I was 20-something. The yearly total, it's not 30 years old now that I think about it. It was 1991, I believe. 1990, 91. The yearly total is $61,612.50. That's over 231 trading days, averaging $266 a day. That's a gross number, not a net number. All right. If you have not taken our free trial, then just go to the home page at CFRN.net, right over here where it says register for a free trial. Put in your name, put in your email, click on register for a free trial, and you will be sent a confirmation link. Okay, so you must click that confirmation link, and then you will have your free trial. All right, that's it, guys. With that, I will send it back out to Phoenix and stop the recording and take a look at John's picture.
Alrighty.
Very nice. Very nice, John. Who does your hair? This is the picture John sent. Nope, you can't see it now.
Oh, I can't see it. I thought you wanted to grab the charts.
That's okay. You're fine. It was a monkey.
Oh.
Yes, handsome monkey.
So we bounced yesterday off this little area, and we're still waiting to see what's going to happen. Is this going to give way? Are we going to end the year lower? What was the recap of the recap, Mike? Oh, you got it in the first trade, right?
Yeah, first trade. 7 minutes, 1 trade, $100 a contract. John H. has a question for you in there, Dwayne. What you were reading from earlier. He's asking you for the link to it. If you could send it to her. Thanks, John.
Yeah, I typed
B.
in. Oh, yeah. I'll just give you the link. Hang on. It's right here.
Okay.
I will put it in the chat box so anybody that wants it can have it. There we go. Sweden declares war on cash. If you're driving or something and you can't copy the link down, just remember that. Sweden declares war on cash. That will bring up the article. It was published yesterday, originally. Okay, so let's go to our good word for the day. Been talking about Joseph and his brothers, and we talked yesterday about laying a guilt. He could have laid a guilt trip on his brothers, but he took the high road. Now we're going to continue. And I realize this is, This is a Sunday school class type of thing that we all learned as a kid about Joseph and his brothers and how they done him wrong. But as grown-ups, or as some of us are growing up, we need to learn this lesson on a deeper level. You'll preserve their dignity and self-worth. Be full of love for others. That's Ephesians 5:2. Imagine how Joseph's brothers felt when he said, "It was not you who sent me here, but God." Genesis 45:8. Now think about that. For all the years that the brothers had lived with this hanging over their head, what they had done. Maybe they felt guilty, maybe they didn't. Their father was brokenhearted when Joseph turned up missing. And so that had to, I would think, make them feel a little guilty, but hey, maybe they were gleeful, you know. We got rid of that loudmouth, blabbermouth dreamer. So we don't have to listen to his dreams anymore. But Joseph spun his brothers' heads around and said, no, you didn't do that. God did it. Really? This is a new level of forgiveness. When we recognize the hand of God in our lives, we see He wants us to preserve the dignity and self-worth of others because He's already done it for us. With full knowledge of our sinful past, He covers us with the garment of grace, and He expects us to do the same for others. As you read the genealogy of Jesus in Matthew chapter 1, you might think the sin of adultery between David and Bathsheba was part of the divine strategy all along. No, sin never is. And David paid a high price. Yet the Bible records these events as though they were supposed to have happened in just that way. The Bible says, "Be full of love for others, following the example of Christ who loved you and gave Himself to God as a sacrifice to take away your sins. And God was pleased." Ephesians 5:2. When you truly forgive, there's no place for self-righteousness. You're able to forgive because, number one, you remember what you yourself have been forgiven of. 2, you acknowledge what you're capable of. 3, you see God's hand at work in the bigger picture. Joseph wasn't being condescending or patronizing, nor was he thinking, "I'll be admired for being so gracious." No, during his years in prison, God had moved on his heart and changed his attitude. So when Joseph said, "You meant evil against me, but God meant it for good," Genesis 50:20, he really meant it. That kind of response takes forgiveness to a whole new level. And that's our good word for the day. Okay. Let that stick with you as the day progresses and as people do the things people do. Think about the forgiveness and the grace that was extended to you. You may be a church person all your life, never really done anything wrong, never hurt anybody, never lied, or you could be a real evil dude. Either way, God loves you, and whatever you have done, to whatever degree, if you've asked for forgiveness, with a broken and contrite spirit, if you've asked for forgiveness, you have received forgiveness. Period. That's how it works. Okay, let's go to the S&P 500 E-mini futures. This is the big picture. This is the daily chart. Okay, stretching back just till June here, where we put in a high on the 22nd and a low on August 24th. Now, if we do that, we can actually do this, because we've either got to do the whole thing or just the last leg. And this, I'm content with this being the whole thing for now, because this reaches all the way back into February of last year. And so where do we sit right now in the grand scheme? Well, I'll make it busy, but that's okay. We won't leave it that way for long. Okay. So based on the low of this year, 2015, I think we have a lower low. No, we have to go back into December of last year to get to that lower low. Let's just look at it from a yearly perspective. We tagged the 38% retracement from the swing low to the swing high. Now, when we do a reverse, okay, from the high to the low, we bounced all the way back. Almost. So close. But that so close may be the deciding factor, because we didn't put in a higher high. And we're lounging, lingering in this area here. We start closing below 37. I think that'll be important for movement on the downside. 2010, obviously this area here. Anything around that big round number, 2000, that should offer some good support. So on the trip down, as we know, markets can decline a lot quicker than they rally. But this one will have some obstacles. There will be some good pockets of support as we start that decline. I mean, look at this decline. This is a daily chart. The biggest sell-off of the entire year lasted 1, 2, 3, 4 days. What do we have? August 19th, 20, 21, and 20. We had a weekend, 22nd, 23rd. So we had that Sunday night. We opened to the 24th and plunged. Then it was over. That's time to go build legs in the other direction. A leg and a retrace, and a leg and a retrace, and a leg. Deeper retracement. Okay. All right. Let's look at the smaller time frame. We had a Concierge Trade Alert last night that said to consider. We had a lot of stuff not trigger last night. It was so quiet. Market fell asleep. Long above 2059. Never got down to the lower areas for triggering, which would have been 32, which would have taken us down to that 24.25 weekly trading zone. Now, as price rallied up here, see, we've got, let me just slide it over. Leg and a retracement, then a leg and a retracement. And a deeper retracement, and a leg, and a retracement. So this really does look like it wants to go lower. Now, yes, we have a bullish hour building here. Look at how much time we've spent consolidating around this area, 53.54. over here we spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours. And then just out of the blue, we made that run. Very dramatic. Up to 76, 77. And then even more dramatic, I think, was the reversal that came off of that area. And now here, 1, 2, 3, 4, 5, 6, 7 hours. Just bobbing along. And so the alert was to be long above 2059. We actually ran up and hit 62.50. So 3.5 points. That was it. That was the S&P. And then today, after that little act, what's happened? Oh, I was counting those as hourly candles again. They're half hours because I've got to recalibrate this thing and get it back on the hourly. Anyway, just goes to show there's no magic time frame. It's almost magical that we can change how we display price, but no matter what time frame we plop it on, or tick chart, or volume chart, or range chart, we don't change price. We simply change the way we display it. Okay? All right, moving right along. Okay, the alert for the Dow last night for the YM said to consider being long above 17,500. And so, as we broke it, the first little move up took us to 17,520. The Dow pays $5 per point. In order to earn the $100 per contract daily goal, you need 20 points at $5 a point. And so it just kept doing it over and over again. Really never going anywhere. I mean, this move got up to 26. This move got up to 21. This move got up to 21. And then this one got up to 57. But it just kept, just like that area on the S&P, it just kept coming back. You always hear me say important prices, important areas. Well, boy, there's no greater example, I guess, than that. And then finally this morning, we did get a nice reach up. Got all the way to 649, so that would be a 149-point move, but no triggers on the short side. So the market held its ground. It didn't really go anywhere. Now the Russell, which tends to be a mover and a shaker, and provides some really good opportunity on most days. Look at this. It looks like a holiday or something. This is what the Russell. You know, there's the Russell. But as Michael said, volume is splitting. Some people rolled over today, so that has a lot to do with it. You know, half the volume is in the new contract month. So by Monday, this will all shake out and sort itself out. So tonight, when I send out the Concierge Trade Alerts, they will be for the new contract. We will roll them forward. Now, for those of you that are on DT Pro, rolling forward is this simple. Go to View and click Roll Forward, just like that. Okay. All right. So we're in December. We'll go to March, but not yet. Everything that you have with a Z, the S&P, the Dow, the Euro, the NASDAQ, the Russell, see the dollar, we already rolled bonds, yep. Everything with a Z, anything you have that still has a Z, It's going to go to H. Okay, so last night on the Russell, real quick, and then we'll go talk to David, and then we'll finish these up as we talk to Ed. The Russell, 49, long above 49. So that did come to pass. Right along here. $1149.1. That's 0.2. We need 0.1. Yeah. So here, this swing high was 48.9. Now, if you're going to be long above 49, it's 49.1. Swing high here was 51. So that was 9 ticks. Here, we got to 51.3. So that would have been 12 ticks. 50. Remember, because we got to go, if we're going to be long above 49, we got to be at 49.1. That's the first spot above 49. 51 and 51.3. Now, we had also said that on the short side, consider being short below 41. And so that came to pass as well. Or maybe it didn't. Swing low was 40.5. Yeah. So that would have been just enough to get you 1141. It cut down to 40.5. Now at 4 ticks profit, we moved the stop to break even. It's very aggressive, but that's what you see us do every single day in the live trading room. So when you take a look at that spreadsheet, take into consideration that. And of course, I can stretch it out, and then it'll, you can see it a little better. But from 41, if you drop it a tick, that's going to make it 40.9 to 40.5 is exactly 4 ticks. You got to be so quick to get your stop moved in a situation such as that. So very easily, you see how this pulled back? This could very easily turn into a stop out. You do have the option of using the automated feature on the DOM, which will automatically move the stop for you to break even when you have 4 ticks profit. Now, if you're trading the Russell, you need 10 ticks to reach your $100 daily goal per contract. Whether you're trading 1 or 2 or 3, 5, 10, whatever it is. Okay? 2420 blueprint simply says make $100 in 10 trades or less. $100 in, that's a tick a trade. Well, goodness, there's no way you could make any money like that. Well, actually, if you do the math, you can. It's going to take 48 days. If it takes you 10 trades every day, it'll take you 48 days before you can increase your account balance enough to add your second contract. But before you do that, you've got to first qualify to go live. So anyway, let's go to Vegas. We can talk more about that later in the show. See what David's got to say today. So don't touch your dial. We'll be right back with David from PageTrader.com.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Hey, David, good morning. Welcome to the show. You'd think after so many years of pushing the same button at the same time every day, I'd get it right. But
well, after pushing the button so many times the same time every day, it could slip a little bit, and you could be getting elderly.
could be.
It's possible.
That is true. Yeah. So how you doing?
I'm doing good. Watching the markets here. Today's a little bit quieter than yesterday, and pretty much across the board, we've had some movement.
We think a lot of it. We're blaming a lot of it on the fact that volume is split between the old and the contract and the new contract. Now, have you already rolled forward?
You know, under every other condition, we would have today, but we're actually rolling tonight so that tomorrow we will trade. Any trades we take today are still in December, and then we'll be into March tomorrow, and there you go.
That's what we're doing.
Yeah. Interesting. A few markets are moving. Yesterday the S&P closed pretty well, all things considered. For us, closing above 2040 was a pretty important indication that the bigger move is not yet ready to happen. We got down to 34 yesterday, but they closed above 40, and for us that meant it was likely we have a little more work to do perhaps before this market is ready to go further. We do certainly see a down week underway this week. If we look at the weekly charts, we're definitely down. We made a high this week of 2095. We've made a low of 2034. That's a pretty good-sized week. But under normal conditions, we think lower prices would still be indicated, and I'll be the first to let you and anyone else on the program know if we change that opinion. And part also today with this rollover, you do sometimes see during the rollover period, particularly on the day of rollover and perhaps a day later, you do sometimes see some unusual behavior. Just there's something else. There's another quality in the market, the market because of the roll taking place. Perhaps people, I just don't really know. I just know that I've seen it, and I do see it today. A little bit of unusual, little different qualities to the market. So should be interesting. And then of course by the time we get to Monday. By the time we get to Monday, the roll is Tuesday at the latest. The roll is really complete, and then you're really fully into the March contract for S&P, and we can take off and go from there with the trading.
Yeah, and then we run right smack dab into the holidays. So.
Yeah, we will run pretty much smack dab into the holidays. That is correct.
Now, I shared an article at the beginning of the show, Sweden's war on cash. They are becoming a cashless society. Some stores there don't even take cash anymore. Some banks won't take it or dole it out. And even homeless newspaper vendors have little swipers where you can swipe your card to get your newspaper. They want to tax every transaction. They want to know about. They don't want anybody. They don't want anyone. The savings rates are negative, and so the encouragement is based on the article. They're
going to tax people into saving their money.
Well, no. People won't. That's just it. They don't want people to save their money. They want people to spend it. They don't want it holed up in Johnny's sock drawer. They want it in the economy. They want it at work. They want to stimulate the economy by spending. So they're literally.
Boy, that sounds an awful lot like our government.
Well,
and it didn't work. What stimulates the economy isn't spending. What stimulates the economy is giving incentives and opportunities to businesses and to individuals that then results in spending. Just simply spending money is not going to really stimulate the economy. If I go into a shopping mall with 10,000 people in it and I give every single person in there a dime it's not going to increase the spending in the mall. It's too little for each person and so on. But if I tell each person in the mall that they have an incentive or an opportunity to get something at a discount or get some opportunity to get something that they want in a cheaper, better way, that encourages people to act and to then spend money and so on. And governments don't typically spend money well, as we know. Our government went out and tried to start the green revolution, and it fell flat on its face. Just about some good percentage of the companies that they invested in, many of them went bankrupt, and they were just picking horses, and they're not good at that at all. So who is good at that, or better at that, is the public, the private sector. And when the government gives individuals and companies opportunities and incentives, those companies go out and know what to do with that. But there are the other side of the aisle demonizes the whole act of allowing companies to have incentives and opportunities. I don't even know why they demonize it, but America is made up mostly of small businesses. We have medium-sized businesses, and we have large corporations. We have regulations in place to regulate that. Someday the system will be much fairer when there aren't people who can influence the people who've been voted into office, the lobbyists and so on. And that would make things probably somewhat fairer. But yeah, so Sweden wants to spend money and stimulate the economy, but I don't know what Sweden, I know, in fact, we have some customers that are in Sweden, and they've told me that the tax rates are very hard there, and they have a lot of regulations that are on businesses. So they make it hard on the businesses and so on. So, at some point in America, hopefully during this changeover in presidencies, we'll have somebody in office who really understands the economy. These people that are running the government right now, even if there are some that understand it to some level, the fact is that to get things really going, all you have to do is give people incentives and opportunities, not handouts, not spend and bet on companies, not all that, but real incentives and opportunities for businesses. And the entrepreneurs will come out of the backdrops, out of the darkness, and they will start all kinds of companies, all kinds of things will happen, employment will go up, and so on. But the government always likes to think that what they want to do is they want to collect all the money from you and others, and then they'll figure out how to spend it to stimulate the economy. And it really isn't a very good way to stimulate the economy. I don't know that it's worked a whole lot in the past, but I know that a whole lot in the past, incentives and opportunities really do help the economy. And we'll see it again. Someone will get it right at some point, and we'll start seeing that. That's my take on it.
Who was it that sent out? God, it seems like a lifetime ago. It was, I guess, 2 presidencies ago. What year was it that they sent everybody a $600 check or something? Remember that that first?
Yeah, vaguely. Gosh, that might have even been back in the early 90s. I don't know.
No, it wasn't early 90s.
No.
It would have been maybe early 2000s. Somebody in the audience remembers. I think it was George Bush. I think they sent I never got mine. I'm not sure what happened. When was it, guys?
I don't remember.
Everybody in America, supposedly every taxpayer, somehow.
Oh, the credit, and then if you didn't get it, I think I do remember it, Dwayne. If you didn't get it, or if you owed the IRS, you didn't get it. They would discount it at some rate off of what you owed, something like that. I do now vaguely remember that.
Stu says he got his. Burwell says it was George W. Bush, $300. He says, and he believes it was in 2005.
Okay, there you are.
For some reason, I thought it was more than 300. Oh, maybe as a married couple, we were supposed to get 600. Maybe that's what it was. And maybe we did get it. Maybe my secretary. Burrell says 300 each. So that's what it was. I'm sure the secretary just deposited it or something. Okay. So, I mean, yeah, that was I remember thinking about, okay, this is going to stimulate the economy. Everybody's going to go out and buy a TV or something. I didn't see that. And the negative savings rate, I mean, and let's see. I'll go back to that article real quick. Let's see, it's right here. Got the numbers. Okay. Negative rates. Okay, in Sweden, interest rates have lingered in negative territory at negative 0.35%, forcing account holders to spend their money or else just see their balances slowly melt away. So in other words, if you have money in your account, right, and you don't spend any of it, eventually it'll just evaporate over time. I mean, it'll take a while at 0.35%, but ultimately it'll just go away. Negative rates can also be found in Denmark and Switzerland, where they're as low as negative 1.25%. The Swiss 10-year bond yield plummeted to negative 0.4 on Tuesday, which means people are paying the government to hold their investments. And that's what you talked about the other day.
Yeah. Well, you know, people should be encouraged to save. People should be encouraged to, I mean, it really is a bad practice just to be living from paycheck to paycheck. It's a bad, I mean, some people have to but it's still, I have seen people, my daughter, just as an example, I mean, I've seen others though, I mean, certainly throughout my life, I've seen people who were scrimpers and savers, and on very small income, they were able to save and actually build up something and then do some right thing with it and so on, make a series of right decisions. But you have very limited opportunities if you don't have some savings to make those opportunities come through for you. So some people are born savers. I think my daughter happens to be. I wasn't. I for sure was not a born saver. I started, I think probably for at least the first 35 years of my life, I would say that I was a person who basically, when they had the means to, they would spend whatever they needed to get whatever they wanted. So if you wanted a thing, a car, or a whatever it was, spending whatever amount of money to get that was the goal. Going and getting that thing was the goal. And that certainly is a phase that a lot of people go through. Other people are born just natural savers. They know how to save money and they scrimp and save. My daughter is one of those people. And I've been astonished over the years at how she has done that and how much it does add up to. I mean, I learned some lessons from my daughter, and I learned that here's a girl that can save a sizable amount of money from her job while living her life and having to eat and pay bills and all the other things. Anyway, but so an economy that is encouraging people simply to spend and not save, or to spend your savings, is that's a little bit irresponsible.
It's wrong.
Because
it's just wrong. Nothing. Burrell says that the important part of giving each taxpayer the $300 was because it was a surplus year and many in Congress wanted to spend the surplus. Bush decided instead to return it to the taxpayers. So,
yeah, what a nice idea that was.
Yeah.
I mean, in principle, forget the dollar amount, just the idea that we have a surplus, we're not just going to waste it, we're going to actually...
Yeah, and so how do we go from having a surplus to being $17 trillion in debt?
Well, you get an administration in office that knows how to run up a pretty good tab. Right. And there are people like that, and this one is one. When's the last time you heard the president or anybody in his administration at any point recently talk about the incredible debt that we're in? I haven't heard them. It's just brushed under the rug. Don't even need to talk about it anymore. It's 19 trillion. It's 20 trillion. It just went away. That the fact that that's just insidiously building up under there. He called it anti-American when George Bush had 7 or 8 trillion. Under his presidency, had built up to 7 or 8 trillion, and you know, he's done another 10 on top of that. under his leadership, if you can call what we've seen leadership. And quite honestly, you cannot call that leadership. You know, it's ducking, it's dodging, it's weaving, it's blaming, it's everything but leadership. You'll see leadership. And that's, again, one of the reasons that Donald Trump has one of the many reasons. There's a couple of really powerful things that Donald Trump is evoking in people. He can say just about anything he wants to say, and he's very good at what he does. You know, there's a little bit of a circus effect to him that you kind of could read into this, but Donald Trump is really hitting right on the nerves of people who have been fed up by this emperor's has no clothes, pure political theater drama that this administration puts out there for us. And you know that everything that they say is couched in ways that they can back out later. Everything is political. There's just no reality to it at all, virtually. And here's a guy that comes up with no teleprompter and just says exactly, I mean, absolutely politically incorrect things. And the more he does it, the more his ratings continue to go up. So it's been pretty remarkable. And one of the things that I like to think about sometimes about this is that the distinction, the apparent distinction between George Bush, the junior, the previous president, and Barack Obama was obviously radical. You had George Bush in his, you know, a little bit of cloak and dagger and kind of dark, and, you know, he's at war and all that. And you have this Barack Obama, big smile, you know, fresh new energy. Everybody really thought, you know, he had it going on and he was going to fix things. Well, the difference between a George Bush and a Barack Obama is now being played out with the difference between a Barack Obama and a Donald Trump. A Barack Obama, a person who is frightened by his own, you know, image in the mirror practically of saying anything that he has to, you know, later pay a political price for, take a position on anything real that he might have to pay a political price for, and so on. And a Donald Trump who's willing to just break every rule in the book and say this is what we need to do, even including right up to his most latest one, which is that we stop allowing Muslims into the country. And that's an extremely non-politically correct thing to say, until, it's not a permanent thing, but until we get all this straightened out and so on. And his ratings have gone up even more. His ratings have gone up even more since he has said that. And I think people are responding, and I'd be curious to hear from the audience what they think people are responding to with him, but I believe for sure they're responding to just how blunt and how we need something that actually just calls it like it is. Whether, I'm not saying that we have to follow that exact thing that he says in any and all cases, but just the fact that he just comes out and says, this is what I think we need to do, this is how we're going to solve this problem, and so on. I wonder what anyone else thinks about the Donald Trump factor in all this. What is making him so attractive to so many people? I mean, his ratings were up at like, poll numbers were up at like 35%. I mean, he's a full 10% higher now than he was just a few weeks back.
Yeah, well, I think just recently, the most recent outlandish thing that he did was he says, you know what, we just need to stem the tide. We need to just shut it down.
Yeah.
You know, none of them are coming in until we can figure out what's really going on with them and their religion and their hate and all that. That's it. You know,
yeah.
There's enough ticking time bombs inside this country already.
That's right.
San Bernardino proved that.
Yeah.
We can't risk not even one more. Not even one.
That is correct. That is correct. The administration's not even willing to admit that we're really at a war right now. They are so somehow strangely, is it not strange to anybody and everybody that the administration still wants to do everything they can to downplay, to negate, to just belittle this whole ISIS thing. It's really not that big a deal. They're not going to bother. You're not going to see something like that here. Boom, we have San Bernardino. You know, you're not going to see something like Paris here, and the next, 2 weeks later we have. They just downplay everything they can about this. I don't know why they need to do that. I do know actually why. It's because he is still trying to defend his original statement that ISIS wasn't nothing but a thing. He's still trying to hope that every one of these things could be called workplace violence rather than what it really is, which is Islamic radical terrorism. I don't know why that phrase would hurt the feelings of any Muslim who isn't an Islamic radical. It's quite obvious that you're referring to somebody who uses the religion of Islam and follows it to the T, kill the infidels. It's right in their book. I've read the Quran. I know the passages, at least many of them, and they never did have a reformation in that religion. There never was a second half. There never was an Old Testament and then a New Testament. It's the same. And there are people who take those words very seriously, and of course they just really secretly just want to control the world, and they're out doing that. And it's the strangest thing that this administration tries to downplay that at every possible turn and doesn't believe in it, or apparently doesn't believe in it, while everyone else can see that we're literally at this point, we're in a unique kind of war with these people, and we all know there's going to be another attack on America, unfortunately, at some point, or attempts at it anyway, and we don't know how many of those people are here. Doesn't seem like a really good time to be letting tens of thousands of refugees into the country, and you all know that if we agreed to do 10,000, the number's probably 10 times that by the time they're done. And then what do you have? You know, the Trojan horse philosophy works very well. It worked in Paris. It could work here. Why are we not taking this so much more seriously? And that's the frustration that Donald Trump is answering, is that the question in people's minds, why is this government not taking this more seriously? And he's answering that, and he's taking it much more seriously. I think that has a lot to do with his appeal. And there's many other people on board to be president on the Republican side that are very appealing as well. But he is the one that is the boldest and counters this president at the most extreme. So it's going to be very interesting to see how this plays out. And any one of these guys, Cruz could move up dramatically, you know, Rubio could, or we could end up with Donald Trump as president, which I would go on record saying I would be fine with. It would be very interesting to see how he handled himself in a presidency. I know we would get some good out of it. I know that, and I know that even though there's a clown quality to all of his antics and so on, that he's quite savvy, and he knows how to deal with people. And he's not going to apologize for the success of America and try to dumb it down so that other people don't get their feelings hurt or whatever the heck this president's got in his mind. So there you are.
There was a, yeah, I agree, and I hope at this point, I hope that he doesn't lose the fire in his belly between now and Election Day.
We'll see. Yeah, hopefully not.
You know, once upon a time, we thought he was going to run for president. Man, he milked that thing right up to the last minute. And in the final press conference said, I don't think so.
Yeah. I don't think he's doing that this time.
I'm just saying, I'm just wondering if he, you have sprinters and you have marathon runners. I just hope he goes the distance this time.
Yeah,
really
this improves. He's a businessman first, obviously, but at his age, he has seen a lot, and he probably, just as we all get, some of us anyway, get more political as we get older, because we recognize that the people making the rules are our age. We're their peers, and we're starting to think, well, that doesn't seem like a very good plan, and we're starting to counter that and so on. And he may very much be at a point in his life where he has achieved the goals that he has tried to achieve and wanted to achieve in business, and he may very well want to help. I mean, he may very well literally want to help America get back on track. I don't know that that was the real intention of the current president. I'll give him the benefit of the doubt, but I have, at this point, I have grave doubts that this president had that type of thing, and I believe that Rudy Giuliani really was right when he identified Barack Obama in his own way and in his own words, but generally really not an American president. He's not your normal American president. There's something else going on with Barack Obama and his worldview and so on. And we don't have to go into all of it, but I'm just saying there is something else going on. But with Donald Trump and any of these other guys, the Ted Cruz, the Rubios, the Carsons, and so on, I can just tell you, they individually want to improve the United States of America. They want to get us back on track. They want our economy to be a chugging steam engine. They want people to increase their worth and their financially and otherwise. They want good for this country. I've been left with the feeling that that is distinctly not what this president is all about. He's about something else, but it is not about improving America. He has divided people up dramatically. He is as good at dividing people as Donald Trump is at what he's doing with the media and the press and keeping himself in front. Barack is very good at dividing people up, and it's left a very sour taste in many, many people's mouth, and I think that's another reason why Donald Trump is believable. All these guys are. I think we have a wonderful set of people who have nothing but good intentions if they become president of the United States. I just don't think that's necessarily the case with Barack Obama. There is something else going on with him. So.
Yep, and I think it's going to go into hyperdrive between now and the election. It's just going to he's going to seem more and more bizarre, more and more disconnected, more and more checked out. And it's going to be I think it's going to be a real rocky ride between here and November of next year.
Well, I was just glad that he didn't blame the San Bernardino shootings on George Bush. I mean, that was an improvement. I was waiting to hear something about the previous president.
He's signing some kind of education bill into law today. I have no idea what it is. Any idea?
No, I don't have any idea what it is.
Well, let's take a look at the market before you have to go.
Sure. Absolutely. Well, S&P, if you'd like, we'll start with that as we usually do. We've had some behavior today that I would call a little bit unusual from our perspective, which probably does relate to the rollover. And the time frame that we're in right now, under normal conditions, we would be retesting 2063 to 2064. That's where we would normally be around midday or a little beyond today. And we did have a trade earlier where we rallied up and made today's first test or attempt at 63.64. This was a number that we had, or a forecast that we put out, that's what they would do. But we're again at the point of the day where we would do that. The thing that is unusual is how the market sold off after the first attempt at 2063.64. Today's high is 62.50. How they sold off pretty deeply there and looked like that was going to fail, and then they recovered, and now we're heading back up to those levels. So that's interesting. That's a little unusual. We do have, for those of you that have been to the Reflected Wave course here in Las Vegas at the Mirage, you know that we have a daily reflected wave bottom that's due today, and it probably occurred one day early yesterday, and with yesterday's close above 2040, that ties in with that. So not really that surprised that we're probably heading back up now to test or attempt 2063, even as high as 65 in this run. It's just been unusual enough, a little bit of a quirky twists and turns here today, that it makes us a little bit less interested in trading it and maybe just getting through the day, gathering further information, although we still may do something with it here. So daily bottom, short term, some higher prices coming. If this daily bottom turns into something more than it might normally do, then that will be a very interesting set of conditions. But for the time being, we're on the sidelines here with the outlook that we're now in the period of time where the prices that I mentioned, the 63, maybe even up to 65, would be tested or attempted. So I hope that's decent information. With today's rollover and other that, I think you just have to be extra careful because I have seen a little bit of a twist and turn here that I think you have to just be a little careful with. One of the things I always mention in our group is that the movement of the market doesn't equate to opportunity. Everyone thinks it does, but opportunity is a personal understanding of what the market's doing and whether or not you can take advantage of it. And so just because the market's moving doesn't mean that's your particular opportunity. You have to find your spot and so on. But the more you know, the more those moves can be your opportunity, and that's the work of practicing and understanding and watching and so on until you get an idea. The market's never going to do the same thing it did last time. So if you're trying to get to a point where you can figure out how the market's going to repeat this time exactly like it did last time or very close to it, you're probably going to run into a lot of frustration with that. The market does repeat, but it doesn't repeat pattern-wise. But what it does do is it repeats the energy, and that's a different way of repeating, but it allows you to know quite a bit about what the market is likely going to do under a given set of conditions. And we want the market to be different this time from last time with regard to how it finally plays a move out. We're not looking for the repeat. We're not looking for the pattern to repeat. Well, it went down here in the past, and then it went up to here, so in the future it went down to here, and now it should go up to there. That kind of stuff is it's amateur hour. It's just looking for the market to simply repeat like it did in the past. And there are a lot of seasonal studies that make it clear that the market has a seasonal component to it. I would more rather a person study those seasonals and understand that as a generality that you could follow rather than trying to find patterns repeating exactly in the future as they did in the past, because the market's as big as life. And just like life didn't exactly happen today, Dwayne, you got up today, was it exactly like yesterday? No. I mean, there's things that are the same, you're in the same home and all that, but it's different every day, and so is the market. So we have to look at it in a different way to try to get a grasp of what's likely going to happen, I think, in the markets. So having been down those paths, I've certainly done my, I could say that I did several college courses, if you will, or college educations on pattern recognition myself, and I may not be the sharpest knife in the drawer, but the drawer's pretty nice. No, I might not be the sharpest knife in the drawer, but I discovered over many years that there's other things and other factors in the market that are much more important than the pattern itself, and that is what we rely on to make, that's a big portion of what we rely on to make the forecasts and so on. So let's see if the market can go up, and then any other markets you want to talk about, Dwayne, I'd be very happy to join in.
Well, let's see. Ed A says, David, you've been stating lower levels expected in the S&P. Is that now on hold or off the table?
No, it's not off the table. It's not off the table. There's a daily bottom that the weekly sold off to a daily bottom. My preference would have been I'd like to see them get down and complete the numbers we were looking for by the time they did the daily. But that isn't the case. So no, that is not off the table yet. But we do have now a multi-day bounce anyway, sideways to higher, that is due based off that bottom. And then we'll take it from there. Maybe at that point we can still have a position based on that. It'll be very interesting to see how they resolve this position, because we know what we're looking for. We know what the normal thing is. We know how much energy there is, so to speak, in the move, in theoretically speaking. And we got a good chunk of it yesterday. But I would not say, Ed, that the move is off the table yet. It's just that there's a bounce that is now due from reflected wave and its bottom.
Okay, Richard, I think that answered your question too. Now, Timothy says, which contract are you referring to?
Either of them.
Either one.
March and December.
All right, gotcha.
Yeah.
All right. So let's take a look at what happened with bonds.
Okay.
Again, now we've already rolled bonds, so there won't be that question, but they're quiet like everything else.
Yes.
Just not much to discuss here. You got anything you want to?
Well, we have. I want to double check that we rolled two. Let me just get over there real quick.
Well, no, bonds. We rolled.
I think we did. We rolled a while back.
Ago,
yeah.
Uh-huh.
So let me just double check that. I'm sure that's the case. but I'll be there in a second. So yeah, the Treasury bond market is quiet. We have some people that are long in the bonds. We gave out an indication yesterday that you could buy the bonds based, it was an aggressive entry at about 154.15 because we do have some indications for higher prices, possibly into the rate hike. So isn't that a little counterintuitive? You think the bonds are, they're going to get scared and start to sell off into the rate hike to adjust for that price and so on. But so far, we continue. We have a stop in and all that, but they've not hit it, and we're going to continue holding that position. We're trading at 155.12, so 13. We have almost a point in that trade. We've booked some. We have a protective stop in. We'll see if we can. We've given out the forecast for what we think would likely happen, and I don't mind giving that out here. There's a couple of caveats to this, and I won't go into all the details, but we'd be talking about being in the 156s and change or higher just coming into next week. So that's an interesting set of conditions. That's why we're bullish in the March bonds right now. So we'll see. They're trading at 155.14 right now, and we'll let them continue to cook and see if we can manage this up to that. After the fact, it's very easy, as we've talked about, but when you're in the real trade, you have to really authentically manage that position and continuously judge the behavior of the market against what your belief is that normal behavior would be within certain confines, and try to manage that trade all the way up to if you have a target or however you're trading it. So.
All right, let's see if there's anything else here.
Sure.
David says, speaking of the rate hike, what would be your gut feeling as to where the market would go after they cut, if they do? Well, they're not going to cut, David. They're going to raise. They're going to raise.
Yeah, that's a good point. So they're going to raise the rate. I think it's. Yeah, that's what he meant. It's probably an 85% thing now that they're going to raise. And that's a high percentage. They're going to raise the rates by a quarter point. That doesn't really affect the long bond, which is what we're talking about, very much. It's not. It's more of a psychological throw down the gauntlet. It's been 9 years since we've had a rate hike, so that's a pretty big thing. I don't have a forecast for the result of them raising the hike, hiking the interest rate and what the bond market would do. But I have to say that intuitively, I didn't think. Without the forecasting work, I wouldn't have thought that the bonds would be necessarily rallying into that date. But right now, that is one of the indications that we have, and that's the main one that's got us in this trade, is that we believe that they could very easily continue higher into that rate hike, which, by the way, is Wednesday of next week, which is December 16th.
And John H. comments that it looks to him as if it's already priced into the market.
Yeah, I think it's fair to say that. I think that's a good observation, and it's fair to say that. I think the market has probably already taken all that into account. I think most people believe they're going to raise it this time. And only a no action, now that could change things. But I think he's right. I think it is priced into the market, and for the most part, if not entirely. So there you are.
What about crude? Got anything there?
Well, let me slide over to that real quick. So yeah, the crude oil market has continued lower. I mentioned that basically since mid-November we've been forecasting, and we really went official with it as a potential trade at $41.60 or so, that the market was going to go test 37 to 36 during the month of December. And we've now gone down to 36.52. We have a two-step roadmap here. So the first step is to go down to 36. The second step is dependent on how they close. The second step would be reliant upon them closing the month of December probably above 36 and change. I mean, if we close the month of December, maybe above, say, even 37 or 38 in crude, that would help us to then trade the reversal that we would that's part of this forecast. So until that happens, we're still watching how the market handles 36. They could go somewhat lower here. I don't know what gas prices are, but I have to think that if somebody could tell us in their area what they're paying for gasoline, I'd sure like to know. I don't go to the gas station, but I'd like to know if we're, if you're in California, what it is.
$2
in Phoenix, you're in $2?
Phoenix, I think we're in the $2 range, yeah.
Yeah, that's really reasonable gasoline pricing. Now, interestingly enough, that is not.
Corey says $1.61.
Wow, now that is cheap.
$2.70 in California.
How much in
$1.71.
California?
$2.70. Yep.
Okay.
And let's see, we got $1.71 in San Antonio.
Wow.
$2.40 in Helena, Montana.
$2.40 in Montana.
Rural Northern California, $2.20. South Carolina, $1.80. Phoenix, $1.93.
Wow. See, thank you. All that's, when you get under $2, you are in cheapville for gasoline. That is very cheap gasoline. So now, in spite of that, I monitor the hybrid and the pure electric car sales each month. They have a place you can go to see that, and this has not actually damaged the sales overall. Maybe in particular brands, but overall, the electric car sales are still doing 10 to 11,000. The hybrids and the electrics together, 10 to 11,000, including the Tesla and all the others, cars a month. And so there is a continuing demand for that, and you'll see more and more cars come out that are hybridized over the next several years. And you'll be astonished how dramatically just a hybrid alone improves gas mileage.
Timothy wanted to know yesterday, and I didn't get to his question, so you were already gone. Do you think, he wants to know if you think crude oil could go as low as $34.25 or 28? Now, wait
I'm
a
not
minute.
sure.
I'm trying to, you put a decimal point in there, Timothy. Are you talking $34.25, and then you're jumping to $28? Am I misreading that, or?
Yeah, I'm not actually sure about, Dwayne, for us, for forecasting it. I just will say this, that if we have another forecast, I'll be very happy to give it. But let's see how they handle 36 and what they do here, and we'll be back. And I do have to run. Thank you, though, for the audience input. And, Dwayne, I'll see you here. Thank you, and we'll see you here tomorrow.
Was that a yes or a no?
Yes or no for?
Do you think crude can go to $30?
I think it could, but I don't have a forecast for it. It's not something that I'm up on right now for that number. So,
all right.
Thanks very much. We'll see you guys here tomorrow.
See ya. Bye. All right. Ed Corey time. Every other Thursday, Ed. Stand by and let me open up your mic. I'm coming at you. Okay. Almost there. There you are. Hey, Ed. Welcome to the show.
Hey, how you doing, Dwayne?
Good, buddy. How are you?
Well, I'm doing okay.
Yeah.
Been a little busy this week, but that's like every week, right?
Busy? Busy? What's busy for you? What do you do? You have to go to the mall?
Well, just a lot of family
dry
stuff.
cleaning? Oh, family stuff, yeah.
Yeah.
You got a lot of family, right?
Huh?
You have a lot of family, right?
Well, I have 3 children, and
they have children, right?
just one of them has children. We're working on the others. But
I knew you had.
Do I sound okay? I'm really echoing in my mic here.
You sound okay. You sound like you might have a stuffed up nose or something. Maybe you got a little cold, but no. Otherwise,
yeah,
you sound fine.
That's what's weird about it.
No,
it's funny how this can change from week to week when
it is.
None of my settings are different.
Yeah, are you sure? Are you sure?
Yeah, I am.
I mean, there's like a lock on that room. Nobody can go in there and change anything.
Well, no one touches this computer. Okay. I have a laptop that's kind of sacred.
Mm-hmm.
It's off limits to everybody.
Gotcha.
Because I don't want them messing up all the different stuff I have on it.
Yeah,
so they can have my other computers and do what they need to do, but not this one. But I still manage to mess it up myself, I guess. So.
Well, I don't know. You sound pretty good to me, so.
Okay, good. Well, I can handle that.
All right.
As long as I don't sound, as long as you guys don't hear me like I sound to myself, I'm fine. It's been interesting though, Dwayne. This has really been, it seems like each year we have to reevaluate what we used to think was sacred about the markets and rules and everything. And it's pretty amazing that this market is so resilient to things that used to bother it, meaning the S&P. It's just amazing. And that's, I think, what makes a lot of people that have been trading a while a little bit skeptical in here, just because we haven't seen it levitate like this with the potential catalysts to take it down, and so many of them, and it just won't do it. So it makes you wonder, it's been wrong to bet against the plunge protection team for years, and there's no way you can make money betting against them until that time that they would lose control of the market, which is always possible. That's always in the back of my mind. But I know this, you have to put a portion of your money in the equity markets to have any kind of decent rate of return right now. And doing so, other than your trading in commodities, assuming that you make money and you're accumulating money, you're going to have some money to invest, and you're probably going to do that in the stock market. And I would discourage anybody from not doing that. The thing that I think people are going to wish they had the wherewithal to do is to be able to change their equity portfolios in a hurry should it be necessary to do so. And if you're a commodity trader, you're more likely to be able to, I think, pull the trigger and do just that, because the stability in the stock market's been really great for everybody who just wants to park money in there. And I have a 96-year-old aunt who I help with her money, and she just doesn't ever want to sell. She's 96 years old. She is 95% in equities, and she never wants to budge out of that. And I finally talked her into, I had put her in these master limited partnerships that have just been hammered lately, but we got in really early, and she had so much money there that became over half her portfolio in 3 MLPs. And one of them was Kinder Morgan, which got slaughtered here. I don't know if you noticed that, but anybody who's in those names knows that we were fortunate enough to sell. I sold half of her other 2, but I left Kinder Morgan alone, and that's one that needed to be sold too. I wished I had done that. But, it was all I could do to get her to. I have power of attorney over her account, but she really didn't want to do it, and I always told her I would never do anything she didn't want me to do. So she just didn't want to come out of the stocks because her father had told her, my grandfather told her, you always need your money working for you. And so she's always kept her money in the stock market. It's done pretty much better than any of my family's ever done in the stock market because of her staying with it. And she's 96 years old, and she's still with it. Is she? Amazing. Gives me hope.
Still got good health?
Yeah, she does. She's got arthritis and aches and pains, but she never complains. She's just,
that is very encouraging.
She is. I have 21st cousins down here in Texas. And she knows everybody's birthday, their anniversary date, their spouse's birthdays, and their kids' birthdays, the whole family. We call it, anytime we want to know who's coming up this month, we just call her, and she just whips it right out without even going to a book or anything. She's got it all in her head still. So she plays crossword puzzles, and it's done a lot of things to keep her mind going. She credits it to the crossword puzzle, but my sister, who's a doctor, she said that she's checked her out, and she said that she just started with such a high IQ that she's got some memory loss, but it hasn't even shown yet because she had such a capacity built up over the years. Now, I don't know if that's true or not, but that's what my sister told me. So much for that.
Jeanette typed into the chat box, guys had been asking this week if they thought crude would go to $30 or 28, and see, Jeanette just typed in on December 17th of 2008, January crude oil futures tumbled to $35.98 during intraday trading. We will get there again due to the massive inventories and output coupled with low and declining demand. What do you think? You think we're going to see $30 crude?
Well, I think we'll see 35.98. We got 36.52 today, so we're ever so close, huh? 54 cents away from it. $30 crude. We may. We really may. I think if you look at the fundamentals, you would say yes. Okay. If you look at the fundamental problems we have in the market today, you'd have to say yes. And one of my good friends that I've worked with for years sent me this note over the weekend. I think there's a chance for WTI to really break down before the expiration of the January contract. He says the open interest is huge, and there is 30 million barrels of crude oil sitting offshore in the U.S. Gulf Coast, with a big turnaround program in the refineries on the Gulf Coast, meaning they're shut down, partially shut down for maintenance, and January turnarounds are very high for January. So he thought that from trading action last week, there was a lot of short covering that occurred on off chance that OPEC would do something, and all those people got flushed out this week.
Yeah.
Basically. I mean, he didn't say all those people. They hadn't gotten flushed out when he sent this to me. Okay, so, I mean, this is what he was thinking over the weekend, and he's really, really, really a smart guy. He makes his living trading crude and has for 30 years, and he trades big stuff, so he's got his own oil company. So he sent me that over the weekend, and I thought after I sent what I think I sent you, Dwayne, what I said about crude, so I might as well just go to that when I
in fact, I can see the chart
because that's a tough question. Will it go to $30? Fundamentally, it should go to $25. My yearly predicted low this year on my stuff predicted almost a year ago, December 3rd.
Now, for some reason, when I made you the presenter,
I never thought it would make it.
You're back. Okay. So you can grab the screen.
Oh, okay.
Now, when I was switching the screen over, it cut off just a little bit of what you were saying. So you can say that last sentence again.
Okay. Now you're really challenging me. The yearly predicted low for crude oil this year, I believe, was $26 and change. And when that came out last December 31st, when the computer spit it out, I didn't think we'd get close. I didn't think we'd get closer than about where we are now. So, but looking at the fundamentals and how they've deteriorated, and the demand basically is the problem worldwide. We just really don't have a lot of demand for this stuff, and what OPEC did was, quite amazing that they decided to increase production. They can only increase production to the point people will buy it. So demand is still the limiting factor here, and if they increase production and there's no incremental demand to take that increased production that they just did, what's it going to do? It's going to get stored in tanks or onshore until they're full. So they're limited. They're limited the amount that they can put in storage. Eventually, it'll cut them back on their production levels because they got nowhere to go with it. So the market's going to correct in here. The market's going to eventually fix itself. I mean, the way the commodities are acting, they're pointing to a full-scale depression worldwide. I mean, the commodities just can't get off the floor right now, and you know, they all look like, you know, a boxer that got knocked to the ground and can't get up, like a straight shot down here. You name it, in the metals, copper, and the energy markets, they're just hammered, really cheap. Even corn's gotten smashed. Wheat, I mean,
Hoverboards are doing good.
Pardon me?
Hoverboards are doing good. Except they keep catching on fire. There's just cheap knockoffs, and the
Where
credit
can
card
I
companies.
get the futures on hoverboards? I'd like to take a look at that.
And there's this huge fraud thing happening. 75% of them sold or becoming chargebacks. They're being bought with stolen credit cards. I mean, it's
oh really?
Yeah, it's turning into a real holiday nightmare for a lot of merchants.
Yeah, I'm glad I'm not a merchant this time around. I think they really are undergoing structural change in that marketplace with all the stuff that's being done on the internet. I mean, it's just, you still want to get your hands on something that's significant if you're going to put a large sum of money up for it. But people are getting bolder and bolder based on what they're buying on the internet. And, you know, if they don't get hurt the first time, they'll be back in for more. But I'll tell you what, Dwayne, let me just talk to you a little bit about this crude, because I can't answer that question right now. I'm open to it going down there. I think it'll have a hard time staying down there if it does. The problem is, what crude's going to probably do is find its bottom sometime in the first or second quarter of this year. And when it does, it's probably not going to ricochet to the upside like and put in a V bottom like unless it's into the second quarter, then it could. But the demand problem that we have to deal with right now really isn't going to go away till we get towards the end of the first quarter, into the second quarter. And if that's the case, you know, I don't think we make a sustainable recovery. The market will probably, if we put the low in this month or next month, the market will probably go into a trading range, and it'll go sideways for a while to bottom, with the exception of, you know, things erupting in the Middle East. You always have to qualify it with that, but there is plenty of oil on the water right now that, you know, doesn't have a home, and that being the case, it makes, you know, a supply disruption in the Middle East less critical, you know. So we've got to, you know, when you dial in the fundamentals on this crude thing, it keeps looking worse and worse. But you know what? The market always bottoms when it's in the worst position. You know, when things look the worst, that's usually the bottom. But they just keep coming out with worse and worse statistics on the fundamentals. So let me, what do I have up here? I got gold. I didn't even want that. Okay, so let me just go to crude oil here and look at the weekly chart. This is the leg down from the top that we put in last year, and we're in the fifth wave down. Very clearly, we are in the fifth wave down here. Now, if this thing goes into the 25s, it's going to create problems. You know, it gets down to 25, will be too much for it to not have to lollygag around some more and not be able to rock it out of it. But if we just start to break it down of this fifth wave, and we'll break wave 5 down, which starts here of the fifth wave, we'll go to the next chart and see that we are currently in wave 5 down of that. So we'll just go ahead and break this next leg down here to see what the fifth leg looks like of wave 5. See, it will take the iterations just that way, keep breaking them down. And here we are into the third wave down. We're in wave 3 down, of wave 5 down, of wave 5 down. This little leg here is still incomplete to the downside. It needs a wave 4 bounce. Okay, it needs to rally. So we'll just take a look at this little piece right here. And if this, from where I have the cursor marked, the vertical line to here, will be shown on the next chart. That is in wave 5 down. So we made a marginally lower low today by a whopping, what was it? Went to 652, and yesterday was 64. So we 12 cents lower than yesterday. So we had this significant rally, a couple dollars, almost $1.250 up off this thing. And then we came right back down again, made new lows, but we didn't follow through, which is a good sign that, you know, it's trying to bottom in here, but it still doesn't quite look like it's done it, especially when I look at this fifth wave of this. So you see we keep subdividing this fifth wave, which, you know, as we get shorter and shorter on the time frame, the confidence level goes down that it really needs to make that leg down. But as we look at this, it's still trying to put a fifth wave down in here. And it, as far as I'm concerned, you can count the 5 waves in it right now. That would then lead to a move back up to the 200-minute zero line here. You see, this thing would come up for wave 4 and then make another test back down. And at that point, depending on the magnitude of this bounce that we get, when we get it in here, will determine how low we should go on this move. I can't tell you right now. All I can tell you is it does not look complete right now. And if I wanted to say, well, where am I wrong at? Well, you know, I'd have to take a look at it and say, let's just put these up here. There's no sense in doing an analysis if you can't tell where you're wrong. Okay, I mean, anybody who's been trading long enough knows you're going to be wrong. You know, if you're in here trying to figure this thing out every day, you can't let it bother you to be wrong, but you have to have a plan what to do to protect yourself if you are. Let's see. I can't quite get this locked. There it is. So here we go. What would be a troublesome rally that would say, hey, this thing might be over? How far would it need to go? Well, 382 would be normal. 382 to a 50% retracement would be a normal target range for a wave 4 bounce and still have a high probability of new lows. We can go to the 618 and still come back down, but when we break from the 50% over, start heading towards the 618, if we get over $40 and we head towards this 618, it's going to start to greatly reduce the probability of making new lows in wave 5 down. But until we do that, the market isn't going to confirm the lows are in. So this is on a smaller scale too, but we know that we're in wave 5 down in the larger time frames up to this 200-minute, above this 200-minute chart. So if that's the case, we got to be on our toes here, because this thing may well, you know, have an opportunity to put the low in here. If we have a wave 4 correction that violates that $40 level, we're going to start to suspect that, hey, we don't need to make new lows. We'll probably make another test back down there, but whether we even get to the low or not will depend on how high we go on this bounce. So you got all these conditions in here, and you have other ways to trade the markets. I do myself have other things I use, but I'm always cognizant of where I'm at in these counts. And that's important to me because it helps me if I'm using a momentum system, or if I'm using a tick range or constant volume bar or some proprietary signal that I might use. That would tell me, you know, that I know what to look for on that. Because some of those signals, when you get the swing turns, they're kind of open-ended as to how far they can go. Well, this tells me on a step-by-step basis how far is too much, what should I look for, should I start to take some profits here. If I have the measurements made as to what I can do here, what I should look for, it helps me manage a bigger position. And that's real important if you're a money manager. That's real important to know, because you never swinging the bat for a home run on everything you do, and you don't want to keep yourself hanging out. The more time you're in a position, the more risk you have. And so let's say that we know this is a wave 4 up, and we managed to take a short-term entry to get long down here somewhere. We had some other signal that told us to do it. If we did that, we definitely want to layer out of some of our length as we went up. And by the time we got to the 50% point, I would be out of it and flat, looking to go short if I got a short entry. But if I didn't know any numbers going up, what am I going to use? I'm going to continue to use the things that I trade with on a momentum, price pattern, predicted highs and lows stuff that I use. And this tells me where I should be reducing my position at and be looking for a reversal. It's not telling me to go short. It's not telling me to go long. It's a framework, and it increases my odds of being right. That's what it does, because I'm taking incremental changes and steps in between to manage my position. So if you trade one contract, it's a lot different than trading multiple contracts. It's just a whole different mindset. If you're trading big money, it makes all the difference in the world to know that you're not betting that huge wad and letting it hang out there forever. Because the bottom line is that people that have a lot of money, they don't really want to see the swings in the account. They would rather take a sure 8 to 10% per year with very low volatility, let's say no more than a 5% drawdown, than to take a 20% drawdown and go for 30% a year. That's not what they're looking for. Believe me, they're not. They don't want the drawdowns. So how do you do that? You do that by incrementally changing your position as you go through it. And it's hard to get used to saying, well, am I going to hold myself in there? I'm just going to get rid of it all right now. It's hard not to just get rid of it all right now when you make a lot of money in a hurry. But then that's not necessarily the right thing to do either. A lot of testing has been done to say, what is the right exit point that you should use to get out of a position when you're making money? And many computer programs have come up with the fact in testing that a risk trailing stop is the best way to exit your position in the market, meaning you're following up your stop with your profits. And if you had a 25% risk trailing stop, you need an initial stop on entry to know where you're going to get out if you're wrong. But let's say the thing goes in your favor and that doesn't get tripped, and you get a profit on the position, let's say, of $10,000, and you're using a 25% risk trailing stop. When that thing comes back to $7,500 of profit, you're out. That's how the risk trailing stop goes. It goes up with it moves up as the position moves in your favor. And you know, there's no right number or wrong number, but I know in the much of the testing statistics that I've looked at, 25 to 30%, maybe even 35%, depending on your risk tolerance, is usually the right point to take your profits. You know, to let them ride up there and just keep moving up every day if they're going up every day. And don't move that stop down if the market turns and you got a 25% or 30% risk trailing stop. Don't move your stop. You can move it up. You can't move it down. Actually, you can do whatever you want. And the thing about trading is you have to be able to trust yourself to follow your plan. Otherwise, your plan's worthless. You have to trust yourself.
That's a fact. That's a fact. You can write all the plans in the world, but if you don't stick to them, they're not worth the paper they're written on.
And if the plan didn't work that time, you can go change it later, but don't change it in the middle of a trade.
Right.
That's off limits, really. So here we go. So here's crude. So to answer you, let me just look at this crude chart here and say, okay, this thing's saying that we might come back to the zero line somewhere between $38 and $39, which would be a wave 4 minimum retracement. Okay, so they're not even giving this thing that much to get there. But, you know, I think it could get up to 40 bucks. I mean, this thing's very volatile. You can see, look at this bar. What was it? On the inventories the other day, we had almost a $2 range in that thing. So here we go. If we come up to here, then let's look what the wave 5 projections are on this chart. This is a shorter term chart. We got $34 and we've got 31, 40, 39. So that would be normal. Those wave targets, the wave 5 targets, are going to go up if this thing goes above these numbers. They're going to start to come up as this goes up, because the 5th wave is measured, the target is measured as a percentage of the 3rd wave. Well, so if that's it, let's say it's going to be 50% of the 3rd wave, it can't be longer than the 3rd wave. It could, and it'll be turned back into wave 3, which is why people pull their hair out over this stuff. So just knowing that, it's going to come, if it bounces up to here, it's perfectly normal, and we'll want to get the selling hat back on when we get a trigger entry. If it doesn't get above $39, we should at least hit the $34 level and then down into the 31s. You know, that's still open game. That range is open game as long as we don't get above the wave 4 targets. So how's that for a non-answer? Now, if you call me during the day, and I'm not going to give the phone number, in the day, you know, you can make determinations during the day about, you know, when to turn on this thing. And I look for other things when I look at that stuff too. And so
Timothy wants to know, are you looking for that 4th wave bounce soon, or more lower price discovery first, then the bounce?
Well, here's, if we go to the next chart here, we're in wave 5 down on the small. We're trying to figure this 3rd wave, when is it complete? So when we look at the smaller time frame, we're in wave 5 down. We look at the 14-minute chart to break down the 5th wave. We showed you can count the 5 waves here, but you don't have to be done. This is in undeterminate. I would say this. You know, well, certainly when we get over this wave 4 peak, we will have completed this move down. Now that's $1 higher than the low. Okay, the 37.54. Otherwise, you know, it's still open game whether it wants to come down here at this 35.50 level, down here 35.40, and then 36.24. Those are all measured rules based on this 3rd wave. So that's a smaller increment of time. It's undetermined. I would, if we come down here and take this low out, and we don't really need to. That's the bottom line. We don't need to take that low out. But if we should do that 36.52, I would look for a reversal back up above it and probably try to find some kind of fractal on a shorter term chart to stop myself into the market if I wanted to trade it and I had enough time left in the trading day. That's what I would look for. But I'm not looking for it right now because I think this is too big of a market here right now for me to pick little stuff out of it. I just don't want to miss the big moves. And if I put a lot of smaller positions on, a lot of times they'll conflict with me thinking clearly about being the big thing. So I try and keep the bigger picture in line there. We did have a weekly sell signal this week, Dwayne. I sent you my stuff. And so far it's broke $3.07 off the sell trigger. You got my thing over the weekend, right?
I did.
Okay. Yeah, so we had a sell stop at 39.59 in effect for the week. And so that worked pretty good. They don't always work all that good. I had also a signal in that gas, a weekly sell signal in it, and it's gone for 12 cents so far.
Yeah, there was a question for you on, let's see, do you expect a bottom above or below $2 in natural gas? It's from Bruce.
Well, Today we hit $2 and change, just like 0.08 cents. So I think, let me talk to you about that, I guess. Let me just go ahead and do that. Nat gas, this is my opinion, continue to mark time and wave for sideways price action on its chart. This is my weekend report. Although it should attempt lower numbers for wave 5 down, it would still expect prices to have a hard time closing under the 190 wave 3 reaction low. Resistance is expecting the 227 to 237 area this week. A weekly signal is in effect. We broke the signal to the downside. It was at 212.90. So we still could have a punch on this thing to the downside still. If you go back and you look at nat gas over time, it doesn't spend much time under $2. If there's ever a time where it's going to do it, I guess it would be now when we have all this excess production. But the other thing that's in effect is we are building a lot of terminals in this country right now to export natural gas. And they're building them very quickly. There's been a rush on them because they can produce more nat gas. And the side product sometimes is crude oil, which would be more crude oil to it. And once the exports are flowing, they're going to be selling at really high profit margins compared to our $2 right now. They're not going to ship it overseas. They'll ship every $2, they'll ship every bit of natural gas overseas they can, because I don't believe outside maybe Saudi Arabia, we have got to have the cheapest natural gas prices in the world. And Europe pays a fortune to Russia for their gas. And Japan pays, last year they probably paid an average of $15, and we're $2. That's why they're building these export terminals. So when they start offloading that stuff, they're building ships. They have to build the ships to haul them too, but there's some that have been built already. I know some people that are working on this stuff night and day that are working overtime right now on this to get them built. So several projects, billion-dollar projects. So what we've got is nat gas in here is going to be a temporary thing, I believe, because once we can export this gas, our prices are going to have to rise. I'm not saying I like that, but that's how the market works. Nat gas, if you go back to history and look at nat gas, it's been brutal, really, for the guys that have been short under, these levels. So here's nat gas coming down on the daily chart. We're in wave 5 down. We have a wave 5 prediction down here. The first target is down here at 193.30. The reaction level is 194.80 that we've had. But if you go back over time and look at nat gas, how comfortable is it under $2? Well, we can go back to 07 and 06. Let's go back a little more. Look at it. We can go back to when they started trading it, and it just doesn't like it under $2. We had $1.02 on the futures in 1992. That's the lowest it's ever been. But it didn't stay down there too long. And then we had to move down here to 125. But this thing, these are the levels that are the all-time lows in that gas. So would those guys start to shut in product at $1.50, $1.25? Probably. I know some companies certainly did that when this happened. They actually shut them in. And they were squawking because, the highest they had ever seen was 280 up to that point. And then this was when the bottom was falling out again, and they shut in. A lot of guys shut in their wells. They convinced the banks to carry them through the rough times and not require them to put the cash flow up because they didn't want to sell their companies out for nothing, because their companies were valued on the assets of the ground, The assets in the ground were worthless at that point, and they didn't want to sell out. So eventually they got their way. This will probably be one of those times. But on the other hand, you know, this winter is going to be really disappointing. It has been already from a heating demand standpoint. And they'll have to work off some storage inventories that have been built up by the consumers. They buy and store gas in caverns and everything else they can. It's not an easy thing to store, but there are storage caverns for rent that you can put stuff in. And they do a lot of end suppliers to end users store this stuff when it's cheap, and they plan to sell it for, you know, $4 or $5 in the winter. Well, they might not get it this winter, so that overhang is going to have to be worked off. But I'll tell you this, when that gas moves out of these lows, I'm watching it, and I haven't been interested in it for a while, but I'm going to watch it under $2 and see how it behaves. Because if they start shutting in wells, it'll have an immediate impact on it, and they'll start drawing down that excess inventory, and then we'll see something happen.
And that'll start to push prices higher.
Yep. It's like magic, right? Lower prices, you know, the commodity cycle works that way. The lower prices make people cut back. Nobody thinks that they can have prices under the cost of production for very long. That's a lie. They can have price under production enough to make them sell their whole companies, and that's happened many times. So it's usually like you can't wait them out. It's much better to wait and watch it turn. Okay, it's going to be really hard to find the inflection point in that gas. All I know is I don't want to be short under $2. I don't want to try and make 50 cents on that gas, which would be $5,000 a contract. Not with a chance that they could catch me overnight, because this market, when it does turn, really rips to the upside. But we do have a lot more producing capability than we did before, so I imagine even that will be limited until the export terminals are fully functional. When that's the case, then get ready to pay higher gas bills, because you're going to have them. So nat gas is trying to put in a fifth wave. That's the answer. It's not done yet, but it's getting closer. It's in the fifth wave down on its daily chart. It's in the fifth wave down on its 300-minute chart. It's in the fifth wave down on its 130-minute chart. Look how it's stepping through this thing. Mm-hmm. On 25-minute chart, this is really a 19-minute chart. Let's see. Well, this is one of those times when there's no way to count this thing. That could be the fifth wave or the third wave. So this thing's labeling as an ABC, which it's not. So the shorter term chart, it's indeterminate at this point. Haven't got this close to the $2 level. I don't know that there's anything to stop them from testing the 194 and change that reaction low that we made earlier in the year. That'll probably happen. So what it does after that, I'm not betting that it's going to plow through 190, but you know, it would help if we got a little bit of winter this year. We're sure not getting it. And Dwayne, let me see, what else did I want to tell you here? Well, let me, do you have any questions, or is that it on this? I want to show you the S&P. I think it's really interesting.
I'm sorry, say that again?
Do you have any questions more on nat gas, or can I jump?
Yeah, I think that's all I saw on nat gas. Go ahead.
Okay. So on crude, we were looking to this week for it to come down to 38.72 to 35.78. We've got that. We haven't got to 35.78 yet. In order to take the pressure off, this was written over the weekend, we need to see a close over 42.70 in WTI. 46.70 was Brent. These resistance hurdles will come down when prices move lower, and I'll update during the week if circumstances justify. So we had our weekly signal trigger that we got down here low enough that I would be able to move this down to $41 and change right now, but I haven't done it. I haven't put that out yet, but that's what I would do. I still think I have more time. I don't think the low's quite in. And I wanted to show you something about, I found a similarity here, Dwayne, in the S&P 500 and what it did. Did I get that done on here? Let me just see. I did. Okay. EP. I wonder why I don't have the Elliott wave on this chart. It's not even giving me a count. Okay. If I go back, I found this, you know, people question a lot about the Elliott wave, and I wanted to make some comments on it. This is a report I put out in 2009 when things were pretty hairy and the stock market was falling. This is my weekly report back then. And I called it a method to the madness because I wanted to explain a little bit how I use the Elliott wave, which I had been using for 14 years. And I basically said it's easy to learn but hard to master. It's limited in scope, been most effective for use during impulsive waves. The problem is the market spends so much time in corrective waves, and that there are many number of ways that corrective waves transpire. I prefer to use some extended rules that enable one to apply statistical probabilities to target ranges derived from Fibonacci retracements and other measuring rules. It's not a panacea, as there are many ways the markets will move contrary to normal wave patterns. However, when the stars align properly, that's when hitting the mouse button becomes a pleasure rather than a gamble, because you know the odds are really on your side. But you have to patiently wait for that to happen, obviously, depending on your system. Technical analysis can yield some high probability signals on what's going to happen next, but that's it and no more, taking one move at a time. The strength in Elliott wave lies in what are the potential probabilities for the current move and potentially for the move after that, and in some cases the next moves to follow. Like chess, current pattern recognition enables the anticipation of the next move. The moves, however, rarely follow as expected. To improve the analysis, I use chart patterns, momentum indicators, and proprietary signals, in spite of them being in conflict with my wave counts at times. So I do go against the wave count, depending on the time frame I'm in. If I have a higher probability trade, I'm going to not let that stop me. I've found through the years that Elliott wave provides me with the best framework to use other tools in the arsenal to trade within. Here was when we made the 2009 bottom in the S&P. This chart's reflecting, I was writing about it this time. So I'm showing you in live what I did. Current S&P 500 wave forward weekly targets on this rally, previously mentioned in the 469 report, remain the same at 883, 962, 1018, 1053, and 1145, with the highest probability in the 962 to 1053 range. So I knew that my probability of getting to those levels was good. Okay, I knew at that point that the 962 to 1053, and I was putting this out to some hedge fund managers, and it's hard to put specific numbers out for those guys, but that's what they want. And that was the highest probability target range. A further breakdown of this rally is discussed on the following page. So just to follow it through, here's the current move up off the lows. And I said it continued its counter trend wave forward rally, which can be seen weekly chart page 2. Continue to feel that this is just the A wave up. This is similar to where we're at now. I'm going to bring back today where we're at. Can you feel this is just the A leg up shown on the 130-minute chart above of a larger wave 4 correction up on the weekly chart. When we see a decent correction down, we'd consider it the B leg down of an ABC pattern, which upon completion should yield to another 5-wave move up for the C leg to complete the bigger 4th wave. Well, that's where we're at, I believe, right now. I believe that we finished the B wave up, and we're coming down, so it's opposite. This ABC pattern was coming up, and so for the wave 4, currently we're going down for a wave 4 in the monthly chart, and I'm going to get to that in a second. So I said I wouldn't question the current bounce without a close under 707. Completion of the 4th wave up on the weekly chart should enter wave 5 impulse move down, which has a high probability of making new lows under the March low. That was the 665 low that was actually the real low. A close over 1150 would be necessary to even start to question the long-term downtrend, which seems highly unlikely anytime soon. Well, I was really wrong about that highly unlikely part. But I knew where I was going to be wrong at on these progressive moves higher because of the previous numbers that we had talked about. This sequence of numbers told me that I shouldn't get above 1053, okay, and I knew that. And as soon as we went above 1053, I saw enough on the internal charts within these bigger waves that was it. And I told them that they didn't need to worry about us revisiting the lows and that we should be buying dips at that point. And what happened is the market went to 957 from this 868, which is where it was when I said this. It went on up to 957. It dropped to 865, and it proceeded up to 1216. So it blew all those numbers out, which it shouldn't have done. Shouldn't have been able to get above 1053. So at that point, you ask what the usefulness of this is. It's not an exact pinpointed place to do anything, but it tells you where the odds are now going to be against you coming back down. And just knowing that was good enough to get the guys out of their shorts. So that's what happened. It went to 11. It went to over 1145 on this move. It took that out real easily. It went into the 1300s, I think. No, it went to 1216. So here's today. I want to come back to today here on this. I'm better off going to the charts. Sorry guys, this is a little hard to follow. Jumping back time frames and everything. So here's the S&P. Here is I was going to show you the low. This was the low we were just talking about in March. How it ran up to 957. We were at 868. We were right here when I wrote that report. It ran to 967. That's within our high probability range that it would get into that. Then it had the pullback. And this was, I was thinking, would be the C leg up, but it went above the 1053. So I knew it was definitely suspect at that point, and it just kept going. Went all the way up here to 1148, pulled back to 1040. It ran to 1216 before it had a formidable correction. But so, you know, when you talk about Elliott wave, and I just want you to see how it works. If you have the numbers together, you kind of know whether you should be in a position or not, and whether you should stay or not in that position. And that's really important. So we bring this back to today, and I stuck some letters on here myself. I'm still counting this, as I have been for a long time, as the A wave down here, which was 1831. That's the A wave down. This is the B wave up to 2110. Very, very strong B wave up. They're usually not this strong, but this is an exceptional market in the way it recovers. I think there's a lot of interest in not letting it fall. There really are. So it recovered up there, and I'm labeling that the top of the B wave. Now I'm looking for the C wave down here. Are we going to get down to these levels? This is 1727 and 1601. That would be ideal. But we have to get down to the zero line here, and at that point we'll take a look and see where the market is. And if it's on any support levels, we'll have to be, looking possibly to turn this thing back up. It doesn't have to turn up, but this is where we're at today, right here. So this is the mirror opposite of what it was at the bottom. That's what I'm trying to show. Because we were in a third wave down when that thing hit 665. It came up for the A, went down for the B, and in the C leg it took out the 618. So the 618 here is way down at 1475. That would be problematic for the bulls. If it gets below this, it'll probably bother them a lot, which is 1601, the 50% retracement. So I still am looking for this to happen, but I have to tell you, B waves hardly ever get that close to the top of wave 3. So this is a rare bird here. It has been for years, and I'm willing to give it more than would be normal. If it was a different market and it retraced that much, I wouldn't be messing around even thinking it was going to go lower. So maybe I shouldn't be on this one, but I am. If this had come back to the zero line on this plunge, I wouldn't be so confident about it. Okay, I would really be scared then. In fact, I wouldn't be shorting it. But it didn't. And this is just a normal oscillation. It's a normal harmonic in the market that should occur in a normal correction. But this thing's been anything but normal, right? It really has. So I'm still looking for this same stuff. I haven't changed my tune in a long time. That doesn't mean I'm right. It means I'm hard-headed, maybe. So here's the current leg down. It looks like we finished something in here, a 5-wave move down. So what I would be looking for now is the resistance areas coming back up on this. Let's see. I think I did them somewhere. The resistance areas coming back up that are important to us are, here we go. We're already through 64.87. That was a 50% retracement. Then we have 72.10 as the 80%. And we have 83.25. 72.10 is the 618 and 83.25 is the 80. So somewhere between 6,500 and 7,200 would be an ideal place for the market to stall out. We'll see if it does. But I'm staying the course so far on this count. It's what I think. Since I believe we finished the first leg down here, we're going to retrace this move back to 2110. And 65. We just got to 66.25. So 6,500. 7,200, it's a pretty good target range. Let's say 8,400 is going to really start to be too much of a move. But this thing's gone too much already and still broke. So I don't know what's too much in this market right now other than to get over the fractal at 2110. So it'll take a lot to make me change my mind. I'm not comfortable. It's hard to be comfortable in the market right now. And let me show you what I said. The index continued in a strong B leg up within wave 4 on its monthly chart. This should ultimately be followed by a C leg down, which we got this week. We're in that this week. We started it. Short-term charts favor higher tests as long as the 2039 to 2060 support range is not broken first. It was broken, but we did also make new highs this week above last week's highs. So we did get the test higher and made a marginally higher high. The S&P will be more susceptible to a sustained rally once we have a deeper correction and the weekly wave 4 minimum retracement has been met on the monthly chart. Weekly. Hold on a minute. Was I using the weekly chart? I meant monthly. Sorry, guys. at this point, I'll then be open to increasing the percentage of equities in my portfolio. Until then, strong follow-through over the 2134 record high would be required for me to increase my current equity allocations. So it's all numbers based. That's the way I would look at it. And so I don't think I added anything new there. It's just I want to explain myself in more detail. So, Dwayne, are there any questions?
Well, I think we've covered them all. Oh, here's one right here. Burwell has a question for you. Question for Ed. Typically, a C leg will go below the A leg. However, a C leg can at times only go as low as the A leg. In your experience, how often does the C leg only go to the A leg low and the MACD still go to the zero line?
Well, it can. The MACD is kind of the MACD is a price and time dynamic, so it can get somewhere by going sideways long enough. It can get, so in a wave 4, if you're in an uptrend and you have a wave 4 pullback, it can get to the zero line by going sideways, but that'll take a lot more time. If it gets there quickly, it'll be more of an impulse down and cover more ground, higher magnitude. I've seen the C legs down not take out the A legs down, but I would say 75% of the time they do take it out. And I think they do it independent of, I don't use the MACD as part of measuring whether they should take the A leg out or not. They usually do. They usually do. Like you said, I think you said that. But I wouldn't let the MACD keep me from making any big inferences about that. It merely says that we've let enough air out of the balloon that the market's rebalancing itself and does have a chance to turn. It doesn't really, that's really what it's doing. It's dissipating some of the pressure that is driven either down or up. And it says, well, that most of that pressure is exhausted at this point. But not necessarily all. You know, sometimes the whole wave count will change. It'll get to the zero line, fail to bounce, and it was like it's a really powerful move. It'll ignore the zero line and just blow right through it, change the whole wave count. Before you know it, you've changed trend on the current chart you're looking at. So I disassociate it to some degree from that. What I like, Burwell, best is if I can count 5 waves down in the C leg and I've hit the zero line, then my odds are really good that if there's going to be a turn in it, it should occur fairly quickly. And so that's what I like to see. And it's kind of like dotting the I's, crossing the T's. That gives you more confidence. And this chart here is not the wave count, so I don't know why I have it up. So this move here, we're watching up here, we'll see how it does on this, because we got to take that thing back. Actually, there's 2 ways to measure it. 110. The first measurement, like I said, I'm looking for resistance between 65 and 7,200, and then some more at 8,300. There's some other numbers behind that I haven't calculated yet. Let me see. We'll just use those for now. We'll just use those for now. So, Dwayne, I think that's all I got.
Okay. There's a question from John. How can wave 5 be a lower low if it is not a lower low?
I'm not sure I understand.
I'm not either.
How can it be a lower low if it's not a lower low?
Yeah.
Did I say
John,
something?
I don't know. John, try to pin that down. And Richard's got a question here. Could the B wave not be completed yet? Have the same count as you had as B wave is completed, but still have a slight possibility, 10 to 20%, that we could still go higher in the B wave. Have this week and next in which market should show its hand?
Yeah, I think I agree with what Richard's saying. It can go through that. I'm not betting on it, but it can, and this is why I said that I'm not going to mess with this thing anywhere between here and the record high about increasing length. I'm more concerned about a downside break, and so I would give it room all the way up to 2134, which would be an up and over B, and it'd be over, you know, the A leg. And I can see that as a possibility, but I'm not betting on it. But it wouldn't bother me. It wouldn't change my wave count. It wouldn't change my attitude. I need to see follow through over the 2134 high before I'm willing to change my hat. And how much follow through do I want? 20 or 30 full points. Then I'll say, I was real wrong.
John says it should show distinct swing highs and swing lows. He had asked the question, how can wave 5 be a lower low if it's not a lower low? And then he said it should show distinct swing highs and swing lows. So I'm just reading you the question. I don't know.
I'm not sure how to answer it. I mean, if wave 5 doesn't make new, wave 5's, it's called a wave 5 failure when it doesn't make a new low, but say attempts it. And even it doesn't really need to even get close to the other low, but a serious attempt of an impulse lower that fails to take out the impulse of wave 3. Let's just look at the chart here. This is the wave 3 here. We got the wave 4 up, and that's clearly an impulse down there because we dropped so fast. That's very impulsive. We made new lows, and that's it. Now, if that stopped here, would it still be labeled as a fifth wave? It would if it started to go back up to the point beyond retracements allowable back to this fourth wave top. So it's still labeled at a fifth wave, it just wouldn't have eclipsed the wave 3. And one of the things on this program, and I can't see it here because it did already make new lows in wave 5 down. Had it not made new lows here, there'd be a number up here that's an algorithm generated number. Let me see if I can find one. Yeah, I can't find it right now. No, there's 30. Okay, so here's this. Let's take a. This is current S&P stuff, right? So we started this move down from the 79.75 from yesterday, I believe it was, and we came down to this 34 and change low, I believe it was here, 34.25. Okay, then we made a move back up. Sorry, trying to get this back where it was. Then we made this move back up for wave 4. This is a bit strong for a wave 4. When this number gets below 32, it starts to say it's starting to get a little too high for expected new lows in wave 5 down below the wave 3 low. So chances are starting to be reduced. I mean, it's like you get to 32, you're about 50-50 on this number. You're about 50% chance of making new lows in wave 5 back down at 32. So we're a little less than 50% at this point as to whether, even though it's counting as a wave 4 up, to whether we're going to come down and make a new low in wave 5. But if it comes down here under 2050 or 2045, it doesn't get to that 34 low, 2034 low, it's still going to label it a fifth wave once it turns higher. Okay, I don't know if I've answered your question or not. That's all allowable in Elliott. They are fifth wave failures. And this is a gauge that helps me determine whether the odds are good or bad. So this thing's pretty much come up high enough to bring it in doubt right now, which means we could retrace the move all the way back to 2110, which has higher numbers. And I'll give you the rough numbers. I need to do those anyway. 2110. So we would have on the bigger picture, I gave you the numbers, resistance of 6,500 to 7,200 will be a good place for it to stop in this count. And then we have on the bigger picture, we have 2072 as a 50% retracement. We have the 618 at 2081. We have the 80 at 2095. So we could do all those numbers too, and then we would come on back down for the bigger punch. I mean, I give it a lot of room because it needs a lot of room, and like Richard said, the holiday season, you know, there's a lot of stuff up for grabs, so it could well happen. It's really hard to pin down the S&P. It really is right now. But I still think the bigger counts are much harder for them to be wrong than the shorter term counts, which is why I like that monthly wave count. I mean, you have to go back to that when the market starts overlapping all these moves, which it's been doing, and not trending. You know, it's all panic one way or the other. So, Dwayne,
The larger the time frame.
I think that's as good as I can do.
All right, buddy. I think that's all the questions. Richard commented that would be a true flat correction for the B wave to make it to the old highs. So, okay.
Yeah.
All right, my friend. Well, gosh, it's
Okay.
been 3 weeks since we chatted, but I'll talk to you again here. Oh, we had the holiday, and we're going to have other holidays come up too. So we'll figure out our schedule as we progress through it.
Remember, Dwayne, holidays are a good thing.
Amen. That's right.
Okay. Take care.
All right, buddy.
Okay.
Bye-bye.
Bye-bye.
Okay, guys, that's going to do it. S&P is definitely climbing a little bit higher here. Let's put in a high up at 2067. Let me take Ed off the hook here and mute him. There we go. All right, Ed, you can go back to your quiet lifestyle because you're muted and you're good to go, as they say. And we're going to go too. We're going to leave it and let it run overhead. By the time we talk tomorrow, price will either, even though it's a slow go. Well, it's tough to say that because we're going to roll forward tomorrow. I was going to tell you that price will either be, well, I'll say it for the December contract. Well, price will either have reached 76.77 or 24.25, or it will have made one heck of an attempt to get to one of the two. Although it's so quiet with this rollover business, if we roll it right now, oh, stop. It let me do it earlier. See, it rolled it forward, but it won't show the price. All right. That's okay. We're going to shut them all down and roll them all forward tonight anyway. So, what did it do? Oh, I see what it did. All right. There we go. Front and center. All right, guys, that's it. Partners meeting tonight. If you've been on the trial for the past week and you want to be in the partners meeting tonight, then send. You should have the information to become a partner. If you don't have it, send a request to support@cfrn.net. Support at CFRN.net. Still enough time, get you in tonight. Otherwise, we'll get you in tomorrow, and you'll be able to watch the recording of tonight's workshop. Tonight will be 236, I think. Up there in the stratosphere. Anyway, guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.